Okay, we are on. Hi, this is Michael Waits, and welcome back to India Game Changer. Today, we are honored to have Deepak Aggarwal, a co-founder and the co-CEO. That's rare, a co-CEO at MoneyBoxx. Deepak, it's great to have you on the show. How are you doing today?
I'm doing very fine, Michael. Thanks for having me. It will be great pleasure talking to you.
The pleasure is all of mine. Before we get into the main part of this conversation, can we get a little bit of your background for some context?
Yeah, sure. So, Michael, basically, by qualification, I'm a chartered accountant. I qualified in 2003. And then, for a couple of years, I worked for G Capital in the structured finance group.
Okay.
Tracking GE companies, in terms of debt and governance. And then I moved to Deutsche Bank for equity analysis. For almost 3 to 4 years, I served Deutsche on both on the equity side and the debt side.
Okay.
And then for Bank of America as Asia Pacific industry risk the head. So I would say that part of almost a decade of my career, I have been an analyst. So on the equity side and on that side, and researching a lot of companies across the globe. So because Deutsche Bank has an international portfolio, so a lot of tracking a lot of companies in the United States, say almost top 500 companies there, 200 companies in Europe and Asia Pacific. So it's a very diverse kind of experience into multiple sectors, including technology, petrochemicals, refinery, consumer, but all of research, a lot of how cycles work, how does credit work, how all those numbers plays, so that kind of career.
Did you work at Deutsche in the United States at all? Did you travel to the Deutsche Securities office in the
No,
US?
no, no, no,
No?
no, no.
Okay.
So it's all largely India based. I have traveled to, Singapore and Hong Kong
Got it.
for, a few parts of my career. Yeah. But it's largely all India.
So
Yeah.
that's really interesting. I worked at Deutsche as well in the equity department. We were running a portfolio trading business, and we spent a lot of time going back and forth between New York, London, and Tokyo to run what was essentially a global business in equities. So very familiar with that platform. So
That's great. So we made a product for Deutsche Bank, which was called capital structure analysis. And that was for, analyzing off balance sheet items from equity perspective.
off balance sheet items.
Right, because those Enron thing and WorldCom happened during 2002 and 3. So basically, analyzing the risk on that front, when companies make a lot of, off balance, subsidiaries and off balance sheet items, contingencies, legal cases and all. Yeah.
It must have been such a killer experience, though, right? I mean, look, we built some incredible technology when I was at Deutsche. It was a market leader when I was there. I mean, I'm happy that I survived that whole experience, but a lot of stuff was learned there. What's the impetus for somebody who's working at big institutions? I mean, Bank of America, Merrill Lynch, G Capital, Deutsche Bank. These are big global companies. What's the impetus for someone like you to say, you know what, I think I got this, and there's an issue in India that I want to solve, and then going out on your own? Because look, even when I was at Goldman and Morgan, like I didn't understand how lucky we were to have all of these internal resources. You know, if I needed something done, I just told somebody I need that thing, and they gave it to me. But when you go out on your own, it's like a completely different world, no?
Yeah, it's a completely different world, but see, we I enjoy both. So Deutsche Bank especially, I learned so much
Yeah.
there. In terms of analysis, understanding what cyclicality is,
Yep.
how things change, how you have to see the industry. They got us so many training, like we had a 3 month training from Michael Pimley and Pimley, which is very reputed institute in
Yep.
United States, and then learning from MD level people there at the early part of the career, and we learned about quality, really, on each single thing, how much quality matters. So that was an amazing experience, whether it was in Deutsche Bank or Bank of America, that you have to be very, very deep into what you do. It does not have to be a shallow approach. And while when I was in Bank of America, the screen started with saying higher standards. So that's their code. And then you develop inside yourself that
Yeah.
every time you do anything, you have to be very high on integrity. those are the things you learn with larger organizations,
Absolutely.
and that, you have to respect people. And, those culture then you bring to your own company as well, that, the respect to the people is very important. The culture is very important. And that, you need to have a long-term view and not, have a very short-term view on things.
So I want I
So
want I want to make a point in a way that's backwards actually, and you don't have to elucidate that much. But how many people are in MoneyBoxx right now?
today we are 700 people
So
strong.
700 people. It's already kind of large. It's not the same size of B of A, and it's not the same size as Deutsche Bank, but it's not small either. But if you back up to the founding, right, and you think this analytical rigor is so important, the depth of our analysis as opposed to the shallowness of these are really important things. How do you inculcate that into the culture of the company from day one? Because you can't do that later. Do you know what I mean?
True, true, true. And I think that has helped a lot, while working in these organizations, when we have learned that, you lend billions of dollars.
Yeah.
Say, when I was part of a deal, RPL, where we lend almost 4,000 crore, almost now $500 million today, but much larger amount during that time. Hindalco novel. So, you realize that how important is to have the very, very deep dive into the industrial segment. So then you realize that shallow information is dangerous.
Yeah.
When you analyze something, you need to got very deep into it. And that's what we do at MoneyBoxx as well. I mean, this sounds very, may not be, that great, but then, when we have a large cattle portfolio, and, this is one portfolio which not everyone likes
You have a
in the
large what
industry.
kind of portfolio? Say it again.
So like, we fund a lot of cattle. I mean, buying livestock, buying
Okay.
buffaloes and cattle for milk production. So, which is not, although I mean, as a small and medium marginal farmers,
Hmm.
government has a very high, focus on that, but it's not kind of loved portfolio within the NBFC segment, because you need to get very deeper into it. You need
Yeah.
to understand the lactation period. You need to understand about the breed, about how much money you will make, how this whole system works, having a cattle, breeding it. So no, that is what I think we have really understood, from those deeper analysis which we learned
I got it.
uh, in those larger organizations.
So talk to me about the founding of MoneyBoxx, and then talk to me about the progression of getting to 700 people. It's a big organization. Go ahead.
Right. So in 2010, after my corporate career,
Yep.
I thought of founding my own company, when I started a boutique investment bank. So raising debt and equity, that I did almost for 8, 9 years. So raised about 300 million for, mid-sized companies,
That's real.
largely into manufacturing space, very small niche firm, just to raise funds, debt and equity. And this happened in terms of, generally, after iBanking, either you become a VC fund, investing into companies, or you want to start your NBFC.
Right.
But how this exactly happened, although when I was investment banker, also I was always focusing on manufacturing companies,
Okay.
so that there is a lot of employment generation in India. So all my deals were in manufacturing companies, at Avanza time, when I was running this boutique investment bank. But this happened in 2015, when I hired a driver, personal driver, who is still with me. And, after every 15 days, after getting his salary, he would ask me more money. And then he told me that, sir, I borrowed about 2 lakh rupees in my village, on which I'm paying 6% monthly interest.
6%
I mean,
monthly. That's
I mean,
egregious.
I mean
Can you just tell
3%.
people what 2 lakh is?
So 2 lakh is about 2,500 USD
Yep.
in,
But
yeah.
6%.
Yeah, 3% actually per month.
Yep.
3% per month. So which
Still
is
high.
like 36%
A year. Yeah.
per annum. And then it's a ever never ending loan.
Yeah.
So you are just paying interest for 2 years. So then, because we were always been into corporate lending, doing, like 500 million, 100 million, 50 million kind of loans. And then immediately we realized we used to thought that, there is this MFI segment, microfinance institution,
Yep.
which would be, easily. So getting money of 1 lakh, 2 lakh might be easy. But that is the time when we really realized that it is so, so difficult. You don't even have five players in a country like India who are focused on giving a loan which is thousand, say $1,000 to say $10,000.
Right.
So there is a significant, very significant gap there. Although you have, sub $500 category, you have like 250 players, but there you don't have a player. So that was the kind of inspiration that, we thought that we are gonna solve this problem there.
So just for people to get a sense for scale, right? I think sometimes people misunderstand just like how big India is and how big the opportunity is. It doesn't even have to be an exact number, right? But how many people do you think would need microfinance? Here's the thing too. 3% is egregious. It's like worse than credit card debt in the United States, which can sometimes be 25 to 30%, right? But these loans can sometimes be like life threatening because you're just stuck in it forever. Yeah.
You're stuck in it
But
forever.
how
Yeah.
big is that? How big is that group of people in India, right? I think you call it the missing middle. Like how big is that those people that can't get like general regular finance and have to pay 30 something percent a year just to borrow $2,500?
So the market is unbelievably large. When I talk about numbers, it's about a gap of USD 22 billion.
Right. It's
If I
huge.
talk about the number, but if I talk about, just in the segment we cater to,
Right.
wherein we say that, while 47% of the India's GDP comes from the rural market, the share of credit is just 9%.
Wow.
So, I mean, that's the kind of gap, where we are, half of the Indian population,
Yeah.
and we are a very, very huge
Well,
population.
that's the point I wanted to make is that it's not like 10,000 people over there. It's like 500 to 600 million people that can use microfinance to change their lives and potentially take themselves out of.
And especially a little higher amount. So, this typical MFI, typical microfinance, which is like, sub 600 USD, it's still there, adequately served.
Go ahead.
But you can't buy just one cattle
No,
on that amount,
no, no, no.
to scale. So that is the biggest. So I would say typically $1,000 to $10,000. That's an area which is really, really problematic in India.
So here's something that I really want to understand better. If you're working at Bank of America or if you're working at Deutsche and you're doing 500 million, billion deals, right? For the most part, you have, gap. You have generally accepted accounting principle balance sheets and income statements. You have data you can use that historically has been used to understand people's credit worthiness. But when you move from that into what MoneyBoxx is doing, you're dealing with like alternative data. Is that fair? Like I'm presuming that this is true. So how do you go from, how do you keep that analytical rigor where there's an accepted way of doing things into building a new way of doing things with data that's completely different? And maybe you can categorize what some of that data is as well that you're looking at and what it means.
So basically, whenever you're doing a corporate analysis or even a larger company, what you track is income statements,
Yep.
the balance sheet and
Yep.
profit and loss account, then you arrive at ratios. You see the banking, you see the income tax returns, you see the GST returns, the direct tax and indirect tax returns.
Right.
In these cases, none of that thing is available. And that's the primary reason why the supply is so less. So you neither have income statements, there is no income tax returns, there is no GST returns. The banking is not good enough to analyze. So you have those challenges. So you can assume you cannot cater to this segment, neither in a conventional manner or in a typical fintech format, which will just have the banking analysis or GST, ITR, and sanction a loan in 5 minutes. So typically, that is the biggest challenge of this segment, and that is the biggest opportunity. So what you have to do here is you still have to be very technologically able because you need to process a loan in 2 to 3 days time because the system works on scale, but at the same time you need to dig very deeper into each segment you are lending to. So if
Okay.
you are doing cattle, you need to really understand how the income works for a cattle owner, how much money he will make on each cow, how much money he will make on each buffalo, what is the terminal value of each cattle. So over the tenure of life of a say 20 year of cattle, how much money he will generate, and month on month cash flow, how would they be like? So, or when we do kirana, it's a typical case. When we do kirana, we analyze all the top items which are sold in kirana, whether it is pulses, rice, sugar, wheat flour, spices. So we typically make for each of the segment, we typically in a 90 minutes time, we make a P&L account, we make a balance sheet, we make a net worth statement, we calculate all the ratios, we see the credit history of the client, and how much is the borrowing of the client.
Are you actually building? Because this is something I was thinking about, right? In other words, if you want to lend to them, you do have to understand their businesses in a way that's completely different than how you were looking at these larger businesses. But at the end of the day, you do need to know what their cash flows are, and you do need to recreate their income statements, their balance sheets, their P&Ls as well. Do you give them like the tools technically? So technologically, do you give them the tech that says, we'll do it from today, but from now on, you feed it into this thing that then feeds into MoneyBoxx, and then we can, you know exactly what you're doing now as a business. You can understand your cash flows and your income statement and balance sheets, but we also can understand it. And we can adjust, hopefully higher, the amount of credit that we can give you access to, so that over time, you're giving them the technology platform so that they can run their businesses better, but then you can understand it in a faster way to give them better credit worthiness. Does that make sense?
That makes a lot of sense, and that's like an eye opener for us, like something to discover on that side. Today we don't give them any tool. We have the internal tools which we give to our employees, based on which, after spending 90 minutes doing all those 250 data point analysis,
Wow.
they are able to make these data points, taking their bills and all. And it is all 100% paperless. So we don't take a single hard copy from them. It's all moves on the system, app driven, which comes to our central credit office, and the loan is sanctioned. So although we have the system here, but yes, this is a point that we can tell our clients to use some of the tools available, so that they can get higher credit in future.
Yeah. Sounds like a massive opportunity to build tools for them as well.
Right, it's absolutely true.
I really want to understand, and I want the listeners to understand as well, just like how transformational it is for somebody who doesn't have access to credit, who can now get access to credit, what the impact is on those businesses, whether it's somebody who has, a herd of cattle, or somebody who has like a small manufacturing business that didn't have access to credit before. So it was literally just like living off their own cash flow and had no technology to understand what that cash flow was. But for like 2 generations or 3 generations was just going, I think we're going to be okay next month. How transformational is this?
It's absolutely amazing. I mean, you will never see that kind of change in a corporate. Even when you lend 100 million, you can't see the change,
Yeah, not at
the
that level, right?
impact, the impact which comes for our clients. So it's just a simple thing. When I lend to a credit guy, when a cattle guy,
Right,
he having mostly at the start of it, he's having 5 cattle, and after 2 to 3 years, he's having at least 10 cattle.
right. So it's
So
doubles.
what
That's a big deal,
it's
though, right?
double. It's a very big deal. From it's actually a very big deal in a rural area, that his monthly cash flow doubles. And that's true for even other customers, like a kirana shop, because when we give him 2 lakh, he's able to double his stock. I mean, so on that money, even if he's selling like say, I'm just quoting a number, but that number is not important. The percentage is important.
Yep.
So if he gets to sell 2 lakh worth of more good, and he makes 15% margin, incidentally we see that in 2 to 3 months he can actually double his income. So the return on capital, because there is less of labor involved, there is no machinery involved, it's all his hard work. So the return on investments is really huge.
Do you see on an individual business, on an individual customer or partner basis, that once they start working with MoneyBoxx, let's just say again, they'll borrow let's just say 2 lakh. And when you go back a year later, they're like, hey, can I borrow five now? Because my business is actually growing because I have a better understanding of my cash flow. And just having that access to credit, like you said, can take me from either five cattle to 10 or a Kirana shop, which, if I'm right, it's like a mom and pop store. It's like a mini convenience store, right? That sells a whole bunch of different things and can have different configurations, but can still benefit from credit. Yeah.
Yeah, which is happening. So that's the reason, we really started. When we started, our average loan ticket was like, 1 lakh, or 1.25 lakh.
Yep.
And now after 4 years of operation, the ticket, I mean, 3 lakh was the maximum we used. In fact, when we started, 2 lakh was the maximum amount we were giving.
Really?
And now the maximum amount is 7 lakh. And a majority of portion is going to our existing customers. So because they borrowed, amount of say 2 lakhs from us, 1 year back, and now they are borrowing like, 4 to 5 lakhs with, sometimes security given most of the times,
Sure.
because now after 2 years they're comfortable that we are there to help them in many ways,
Right.
then lending, just lending. So they are giving us as a security their house, and they're taking higher loan, and doubling. So we have cases like the customers who started with 5 cattle and today have 35 cattle in about 3 years time. So we are really inspired with those kind of stories.
So this is where it gets really interesting for me. What is the rate differential between where MoneyBoxx lends and where they were borrowing before?
So I would say that the biggest part is that the unavailability of funds for the customer more than the lending rate, that they did not have that availability of funds. And the rates, in terms of as I said in the beginning, is like they were paying a flat rate interest,
Hmm.
which is leading to almost 40-45% to sometimes 50% annually, wherein with us it's reducing 30%. So so one is that interest rate is significantly lesser, and and then they have now into organized lending space, right? And then we try to give them other services which are complementary. Say, for example, if it's a cattle owner, we have a very unique feature of hiring vets in the branches. So the vet doctors, so they will visit our borrowers, they will guide them on how to improve milk yield immediately by giving them better food, then how to improve the breed, because these are all qualified vets and who would have done 1,000 AIs themselves. So they will guide them on improving the breed of the cattle, the vaccination of the cattle, the treatment of the cattle, the various schemes which are offered by the government. So it's a full plan. And then, since all of these borrowers are farmers also, we also run a program where we distribute free fruit bearing trees to them, which are, there could be a case wherein a borrower has borrowed 2 lakh from us, and we are giving him 30,000 worth of trees complimentary.
And what's the reason? What's the reason for doing that?
So one is that it's the entire cost is not on us. It's largely funded through a CSR initiative. So maybe we take 30% of the cost, the CSR partner is taking 70% of the cost now.
Right.
But the reason is that, what we have found, that a farmer can really, increase his income by 5-6 times by just changing the crop. So if, say, suppose, because in India you have still irrigation problem, right? And sometimes agree can become a speculation if the rain is not good
Fair
or
enough.
there are concern. But with trees, what happens if he's growing, say, like mangoes, guavas, the yield is is like 5-6 times higher. The only problem is that there is this gestation period of 2.5 to 3 years.
Right.
So the farmer is not ready to spend initial amount, which is high, and then wait for that time. So what we are trying to do is we are giving them, complementary trees through CSR partnerships of agroforestry. So, you have impact on climate change. You have less usage of fertilizer because, trees generate nitrogen, you know, and so it helps the other crops. So we just plant on the borders, and then after 2.5-3 years they will have a commercial production of fruits. So So we are trying to make an ecosystem wherein, yes, there is this money lending, but at the same time, there is a very relationship focused approach wherein the income elevation can happen. They increase their income.
Do you envision a scenario where you give access to credit to somebody who couldn't previously get access? They go from having, and I'm just making up numbers, right, 5 cattle to 35 cattle, let's say over a 4 or 5 year period of time, because now they have a better understanding because they didn't have access to lending before. And as their business grows, their income grows, right? You said you're adding to their income as well. That they can actually then move into the traditional finance space where they're earning enough money so that then they can actually take out a traditional loan. Do you know what I mean? Do you envision that happening as well? That's the first thing. But the second thing is, as an NBFC, right, so as a non-bank financial company, you kind of can't make traditional loans, but do you see an avenue for yourselves as well to get a banking license? You can then keep those customers in your ecosystem. Do you know what I mean? And then feed them in so that now that you've helped them grow to a point where they can participate in traditional finance, that you can also serve them once they get there.
So I would say that, Michael, really banking license is not necessary for doing that. So
Okay.
what effectively I'm saying that, there is lending at say 29% initially. Then the next cycle we reduce to 27%, even if it's unsecured loan.
Yep.
Then in next cycle, if he's coming to for a secured loan, we reduce it to 24, 25%. And then, if he's a good enough customer, because our cost of borrowing is also decreasing
Right. I
continuously.
mean, that was the next question, was what's your source of
Yeah,
capital? But go ahead.
right. Because see, in the first year we used to borrow at 18%. Today we are borrowing at 13%, which is a 500 basis point decline.
Yeah.
And in the next 2 to 3 years, I see it declining again 500 basis point, because for the kind of loan we are giving, which is a priority sector lending,
Right.
banks, when you have a good rating, like you are rated A by credit rating agencies, they are happy to give you at 8%. So I'm saying that Bajaj Finance today is very big without a banking license. So when your costs reduce, you can reduce the cost of them. So for a good period of time, you can have them.
Got it.
And when a customer realizes that there are many more benefits of being associated with MoneyBoxx, like these vet services, agroforestry. God knows we want to help them. Even doing better farming practices in future. So they will like to have us on board. Maybe they are on a 10 lakh borrowing, they will have like 2 lakh from MoneyBoxx anyway.
Can you explain as well what priority lending is? And is there some relationship between what the government regulators want you to do or what their target sectors are? And it can't all be farming, right? I'm just trying to understand what this priority sector is.
So basically, priority sector lending is that, as per RBI guideline, Reserve Bank of India,
Yep.
and the government guideline says that if as a bank you are lending 100 rupees in a year, 40% of that loan should go to priority sectors. And government decides that, these are the priority sectors, which says that, okay, 10% of the lending has to go to small and marginal farmers.
Okay.
Out of that 40, 10 rupees needs to go to. And then you have kirana, small and micro enterprises. So basically government wants to promote that the smaller players should get adequate funds. So that's the priority sector lending.
Got it.
And because banks are not able to achieve their targets on the priority sector lendings, they want to buy that kind of portfolio from smaller NBFCs like us, or they want to give us loan and take those loans from us at a very reasonable rate.
Interesting.
So, right. So that is the kind of portfolio you build, because for banks building a portfolio of 1 lakh, 2 lakh, it's a very difficult thing, logistically.
Is there a way, so sorry to get so complicated here, but if you're selling the loans, is there a way for you to securitize them as well?
Absolutely, yes.
You know what I mean, right?
Yeah, yeah,
Yeah,
yeah. You can
package
put
them,
it.
do an analysis on them, and then sell them on to the banks. The banks then can actually let other people invest in these loans and get higher returns or alternative assets for other people as well. Yeah.
It's very much prevalent today. Yeah. So
Okay.
when you're a little big than we are today, people do securitize the loans. Yeah.
Got it. Super, super interesting. Is there also a priority from a gender lens perspective? Does that make sense? In other words, is there a government incentive to lend to people that haven't been lent to before, not just from a sector perspective, but trying to get an even weight between males and females too? Yeah.
which is there. So entire MFI sector,
Yep.
when we say microfinance with 230 plus players, so it's 100% women borrowers.
Oh
So
wow.
basically,
Okay.
yeah. So basically, government is saying that you need to lend to women borrowers. So that's the way it happens. It's a forming of group of women of whatever 6 to 8 to 10 women, and then lending them. And wherein each of the women guarantees others loan.
Right.
So there is a lot of focus on women. So, and just to tell you, 50% of what we lend is to women entrepreneurs,
Got it.
so which becomes a women empowerment thing. And
Yeah.
we have also seen this, that women are better in terms of borrowers.
Pretty much
They
everything, but
yeah,
yeah.
yeah, right. So that's there. And 35% of our lending goes to NTC, which is new to credit.
Got
So
it.
these are the customer who have never borrowed, till now. There's a lot of financial inclusion. Yeah.
And tell me this, yeah, because financial inclusion is super important, right? I mean, we could talk about financial literacy too, but maybe we'll get to that in a bit. It appears to me, not just in India, but essentially in every country, right? If you go into the second tier, third tier cities, and then some of the suburbs of those cities, that it's just super hard for the existing financial institutions to reach them because it's just not, it doesn't, it's not profitable enough for them to put branches everywhere. So how do you address that? Do you put branches in these places? Or is there some kind of mobile application that they use? Or then are you using like the head of the village or the head of the small town to organize all of this and become a de facto distributor of these services so that you know who to deal with when you get to that small town?
Right. So we follow that branch-led model.
Go ahead.
Uh, Michael, the problem is that, one is you have to decide that this customer in the rural areas,
Hmm.
villages need to be served.
Yeah.
And if you decide that they need to be served, they can't be served just on a mobile application, because see, these customer, you need to have collection model as well. You lend money, and then you need to have a connect with them, because these are new to this system.
Right.
And they can't fill in their own data, right? I mean, even if there is a mobile application, these cattle, livestock borrowers, farmers, they won't go to the app and fill in all the information. So the important part is that you need to have people there. So that's what we have approached, that we will have a branch led model, so we can reach out to these people. But obviously, our branch model is not expensive as banks. See, once you're a bank,
Yeah.
you have to work like a bank.
Right.
Your cost of branch, you will have air conditioners in a branch, you will need to have pay those kind of salaries. You need to work on that kind of model, which becomes then unviable for them. you know when you have like 8 lakh crore of book, a very large book per se, giving 1 lakh, a smaller loans becomes very difficult. But for a NBFC who is focused on this model, then it becomes easy, because then what costs are associated with this model,
Yeah.
and you work that way.
Yeah. Look, we had on one of the other shows that I do, I'm trying to get this, I'm trying to remember this guy's name, Dhirendra Mayavanashi, right, who's the CEO and the founder of Turtlemint, was telling us some incredible stories about going into second tier and third tier cities and doing insurance distribution there as well. Once you have all these clients, do you think that there are other financial services that you can serve them in these smaller towns and smaller cities? And further to that, like, do they actually need to have some financial education around this too? And is there an opportunity for you to provide that?
I would say there is a very big opportunity. See, when once you have these clients
Right.
as borrowers, see, they are every way they are attached to you, right?
Yeah.
And then when we are saying that from 5 cattle to become, in 2 years they become, have, or 2 to 3 years they have like 10 cattle and 15 cattle. So there is always a surplus income. When there is a surplus income, you can really tell them that you should invest in gold bonds. You can
Right.
invest in gold,
Take some crop insurance or something, right?
right, right. You can take the insurance. So although for the loan amount we do the insurance, but even today we are telling them, what are the government schemes available on cattle insurance. So you can offer them, health insurance,
Yep.
cattle insurance. So there are numerous products. So even if I tell you, we have so many, I mean, more than 1 lakh cattle today with our borrowers. They need to buy a lot of feedstock
Yeah.
for their cattle, right? On a monthly basis, which is not a small number by any way. We have realized that, if we source it, you know somehow we can reduce that cost by 20% to them, because if we have kirana customer, we have cattle customer in the same place. So we can
Right.
actually talk to manufacturer to place that stuff there. And we can tie up that, because in a single town I have so many borrowers, sorry, so many livestock owners,
Right.
who can buy in bulk on a monthly basis. So, I mean, again, we can increase their income. At the same time, we can make money on that thing. So the opportunities are unlimited. You can do, say, automobile financing to them, because the pricing is even higher. When we talk to dealers in those spaces, pricing is very high. So there are so many opportunities, so many cross-selling opportunities which you can have.
So it would
Once
seem.
you have this positive mindset that I have to change his life, because government of India, the prime minister wants that their income doubles in 5 years. We are saying doubles in 3 years, and we are making a proper way to that. How to do that. Because that today in Haryana people are growing kesar, doing mushrooms, making 5 times the normal income, doing aquaponics,
Right.
hydroponics, airphonics. There's so many things which you can, zero budget farming with vermicompost. So there are a lot of things you can teach them, and then eventually this cross selling is there.
So before I let you go, just one more thing. How important is it for you as an
Right.
individual and for MoneyBoxx as a company to actually change the lives, to have impact on the lives of the people with whom you're providing credit?
See, for us, our business is based on that. So when we say vets, we don't call it CSR. It's a core.
Yeah,
It's a core to the business.
it has to be.
See, if you have to make money, the guy needs to make money.
Right.
Lending is the business. We realized very early in life that, if you're charging more than, what they are able to make from those funds, you will never be successful in future. I mean, over a long term, you can
Yeah.
generate 60%, which fintechs are doing today, but, they need to make money on that. So that's why I'm saying that this hiring of vets as employees is very important, core to the business. That and in future we won't mind hiring even the guys who are specialists in farming to help these guys. And eventually it will help us. I'm not saying that it's all social work.
No,
We are
it's
a
not
profit
at all.
company.
Yeah,
Yeah, yeah, we are definitely a profit making company.
for
We
sure.
have we have high NIMs, we have high spread. We definitely target a very high ROI, ROE.
Yeah.
But within those areas, we know that there are so many gaps which these people are suffering from. So if on a larger scale we can solve them, because I have a friend who is running a 750 cattle farm,
Wow.
and he is paying 300 rupees per cattle as insurance.
Hmm.
But the person who has 5 cattle, he needs to pay 2000 bucks for a cattle.
Right.
So I'm saying 6 7 times.
Yeah.
So if we have a larger portfolio and we can, directly, discuss with the insurance that, these are my customer,
Right.
I will do that group insurance thing
Yep.
if you're able to offer that same price. So, I mean, that goes for many, many areas. So, once you grow, have this in mind that, customer needs to generate so much, like they generate from Apple product, that they don't care about the price. you know it's about the utility. If they're getting that, the benefits are much larger, they will come to us and they will stay with us.
Okay, I'm going to let you go. Deepak Aggarwal, co-founder and the co-CEO at MoneyBoxx. That was great. Thank you so much for taking the time and doing this today. I really appreciate it.
Thank you so much. It's really a pleasure talking to you.